Good morning, Predicted Trades family. Hope everybody's doing well. Let's see. Starting on a weekly time frame chart just to kind of show where we're at. As we've had some strong selling the last week or so, just wanted to look at, the overall structure that we find ourselves in, because I know a lot of folks are screaming with the selling, we're just going straight down to a new low of year. But want to look at the structure of things just to say we could find a little support before we just bottom out and go to the new low of year. So if we look at where we set our low of year in October and how we started to move back up off of that, in November we had that CPI gap up that sent us higher and going towards 4,000. We got up to that trend line from the highs of this year, peaked outside it just a second, and then rejected back down. We are slowly approaching filling that CPI gap. We've gotten into it, but we haven't completely filled it. And just looking at where that CPI gap happened, I marked a little zone of support from that CPI gap. Let's go down to a daily. Come on, Tess. Don't be slow for me. There we go. So, in just looking at that daily in that CPI gap, right? We came down, we took off, and it leaves a zone of support where we had sellers pushing into this zone, a whole bunch of volume that shoved us back up out of this zone, engulfing that red candle. So basically, from this candle's low down to this candle's low, there's going to be some support there, a lot of orders that were left behind long. Just saying that we could start to settle as we get near this zone, and we could start to reverse back up off of it. We have all of our daily moving averages up above its targets, and in a way, we're just coming into a wedge at the end of the year. Can we break down and go set new lows? Anything's possible, but it would mean we have to take out a bunch of key levels of support where, big money has been going long. Just to say that we could kind of fizzle out in this wedge above this support and below this resistance trend line from the highs into the end of the year. Just kind of fizzle out and set us up for next year breaking out of this wedge, whether it be back to the upside or further down. And, we had our June support that sent us back up. We set new lows in October. If we continue to hold above June support and start to reverse again, it's a little bit of an inverted head and shoulders, where we've got our shoulder line here, our head down here. So if we continue to stay above that shoulder line, we could see some upside and start to basically just bounce back up into this range of this wedge. Should we start to break the bottom of this wedge and take out those June lows, then we can start talking about breaking down to a new low of year and back to some of these levels that, some of these key levels were from pre and post-COVID. So like pre-COVID high, post-COVID high, yada yada. And we can see that this post-COVID high, this 3587, was enough to hold us at that low of year and send us back up. Big key levels there, big key levels below that we're not just going to dive through. We should expect some defense of these levels. So that's just kind of higher time frame. Let's go down to our normal prep time frame. And just looking at yesterday, it was pretty simple. We opened, we slipped down a little bit. Let's actually zoom out so I can see Friday as well. There we go. So we slipped down first yesterday. We held near those Friday lows, started to bounce back up to this key level 3878. Quit jumping on me. I'll just do it over on the bigger screen, or the bigger chart. So we held a little bit at those squeeze bottoms, started to work our way up to the daily 50 and that 3878. Bring my key levels back in. When we hit the daily 50 in that 3878, that's when I was locking profit on the longs and called out shorts like the 381 on SPY and the 380. Those went like 30 cents to almost $2. And the 380, it went more like, I think it was 30 cents to $1. But either way, we played the puts back down to squeeze bottoms and then down to these key levels. We did get down below that 38.43 yesterday in this daily squeeze bottom before pulling back up and closing near that 38.43. You can see overnight that we had a large drop down to our next key level that held at that 38.07. And then we made our way right back to this 38.43. Got a zone here with this 38.43, 38.55. We are now below that zone. It has been providing some support when we arrived at it. But now we are below it. So for any upside today, we need to reclaim this zone, get back above it, push off of it to get up to a 38.78 in the daily 50 again. And for further downside, we definitely want to watch yesterday's low. And try and highlight it a little more over here. After yesterday's low, where we held and worked back up to this zone, we want to watch yesterday's low. And in fact, I'm going to just go ahead and grab this whole candle by drawing a little rectangle here. And then I'll extend it just to show, boom, there we go. Just grab that red 15-minute candle that was yesterday's low, the top and bottom of it. And you can see that's where we're trying to hold pre-market. So this zone, or this little range around yesterday's low and where we closed is what we need to focus on going into open today. As long as we can hold this shaded zone around yesterday's lows, we can start to try to work our way back up to these key levels and to these MAs, right? We've got 15-minute, 45, 30-minute, 45, hourly 45. So those are our resistance as we try to make a push up. And if we can get back to, say, that 39.22, that'll be back at that 4-hour 45 MA. As we can see, with what was it, FOMC, we dropped below those MAs, and we've been rejecting them and pushing lower, and rejecting them and pushing lower. So if we talk about a reversal to go back up, we have to start reclaiming those MAs, using them for support to start working back up to the higher time frame ones above. So let's see if this little zone can give us support today at open, start to push us back up to our overnight highs around that 38.55. And if we can hold this zone, looking to push up to that 38.80, where the daily 50 sits, and beyond to the daily 8, daily 21, which all sit above. If we start to lose yesterday's lows, then we want to be targeting the overnight lows and this key level at 38.07. If we give out that 38.28, basically yesterday's low, then we want to be targeting that 38.07, 3800, and past that 37.73. I believe 37.56 pretty much fills that old CPI gap from November. So just some downside targets. On ES today, watch that little zone I drew around yesterday's low. See if it can hold us up and we can see some buying to lead us up. Before I get too far into where we could be going, let me pull up our economic calendar. So today we just have a little bit of housing data coming out at 8:30. We'll see the reaction to that in a few minutes. Tomorrow we've got a little bit at 8:30 and then 10 a.m. with some consumer confidence index and home sales. And then Thursday's the big one with our initial jobless claims and some GDP data coming out at 8:30. Friday we also have PCE. That's going to be a big one as well. So those Thursday and Friday are the big economic data releases this week. Let's see how those go. Next week, not really much. Some PMI on Friday, some jobless claims like we have every week. Home sales. And then we'll be moving into a new year. Oh, it's been a great year at Predicted Trades. We are officially 1 year old. And definitely want to say, definitely appreciate everybody that has joined us, is still with us. We appreciate you guys, your support, and we're definitely trying to build a unique service here, and you guys are helping, and I feel like we're all doing great and killing these trades lately. So I think we've got our upside targets for ES. Let's watch pre-market high and low, and yesterday's low as some guidance to if we're going to stay in this range or if we're going to break back up or further down. Let's go on to NQ. Tech. And I'm seeing in the YouTube chat, I'll cover Tesla. It's a little further down on my list, so we'll get to it. All right, NQ. Oh, come on. Darn it, come on. There we go. So on NQ, just like ES, we've got a key level around 11,200 that we closed near. We went down overnight to hit our next key level, bouncing back up. Overall, we've got that 11,000 to the downside. We didn't quite get there overnight. So if we are going to continue to see weakness in NQ, want to be targeting that 11,000. And then below that, got some key levels at 10,890 and 10,942. Just as some downside targets if we do start to give out overnight low and that 11,000 big key psych level. But We are trying to open right near yesterday's low. So at open, let's see if we can hold above this 11,100, if we can start to push back up and take out this trend line from the overnight highs. Then I'll be targeting those overnight highs to get up to there at least. If we can get above 11,200 and turn it back into support, looking to push off of that to try and work our way back up to, the big key level is that 11,500. We have our daily 50 and daily 8 sitting up there around 11,450, and they're starting to cross, which can create a little bit of a magnet as they start to cross to pull back to them. But in order to do that, we're going to need to hold that 11,100, work up above that 200 through pre-market high, and start to recapture some of yesterday. If we can't, and we start to lose that 11,100, we're going to be targeting overnight low, that 11,000, and then this zone below. Ready. Ready, ready, ready. Come on, Toss, don't be slow for me. It was so fast earlier. Let me try closing some stuff down. So on most indices, we have a daily squeeze and then a 2-day squeeze right below that. A lot of times, folks don't watch, 2-day squeeze. A lot of folks watch the daily squeeze and then stop there. There are 2-day squeezes, 4-day squeezes. There are different ones. Point being, we have started to fire the daily squeeze down into a 2-day squeeze, which basically can mean, everyone sees a daily squeeze starting to fire to the downside. Everyone gets heavily short, but we have a 2-day squeeze sitting to support us that can reverse us right back up. So the daily that looks like it's about to fire down can start to reverse. This happens quite often. So going to be watching on Ready this trend line from the highs from FOMC and yesterday, as we started to kind of go sideways and then ran into that same resistance. So going to keep an eye on that today because it is kind of sharp, and if we can start to get through it, we might see some upside, a little rush of buying volume at this daily squeeze bottom. Basically going to be watching yesterday's low, as we're just like on ES. Oh, come on now. There we go. Just like on ES, we're trying to hold above yesterday's low. And we're pulling up on this trend line from the highs, pre-market. Going to add a little alert for if we start to get above this trend line during the cash session, could spell some good upside. So basically, let's see if we can hold yesterday's low around that 1740.83. Work our way back up above 1750, 1755, 56, kind of the overnight high. And if we can get above that, turn it into support, looking to push back to 1770, 80, and 90, where the daily 8 sits. Get back near yesterday's pre-market highs. But if we keep resisting and lose yesterday's lows, you want to be targeting those overnight lows. And if we see some extreme selling, you'll want to be targeting like 1720, 10, 1700. Going on to YM. Oh, YM made it down to the daily 50 MA. We also have the daily 200 down below. So we've got a very big zone of liquidity. The daily 200, daily 50. Where on YM, I'd have to go back a month or so, but we got above these MAs, used them as support to push back to that 35,000. And now we've gone from the top of this daily squeeze to the bottom, and we're back at key liquidity levels. So just like I was talking about, everyone's screaming that we're going to drop down to low of year. It's stuff like this that's going to potentially get in the way, where if we continue to hold this daily 50 or 200 and use this zone to start to reverse, we could see some extra volume coming in to try to push back up off of these daily moving averages. So overall, going to be watching that daily 50. We can see yesterday's low. Now that daily 50 has caught up to that low. And YM overall looking pretty decent. Actually gapping up a little bit. ES, a little down, basically flat. NQ basically flat. Ruddy's turning positive. YM's turning positive. So YM might want to lead. NQ has been the lagger lately. Tech not really leading us. But overall, we are back above this 32,900. We are pulling up on this key psych level at 33,000. Let's see if YM can stay above that 32,900 and above yesterday's low. So basically downside targets that I want to see hold that 32,900. If we lose that, then 32,800. That daily 50 looking to hold there and work back up. If we start to lose the daily 50, then we're going to revisit the overnight lows at that 32,686. And if we start to give that out, we want to be targeting 32,500 and 32,450 where the daily 200 sit. That is the next target zone if selling continues. But if we can start to hold here, get through our pre-market highs, looking to play back to yesterday's highs, and 33,500. We've got the daily 21 sitting above. We've got the daily 8 sitting below it. So big liquidity pocket above to get up to. Big liquidity level below if we start to lose that daily 50. With our moving averages so close, we're going to be using those as targets for any kind of upside or downside. Apple. There we go. So on Apple, we slid down below my little zone here, 132.5, 133. We fought back to that zone yesterday and rejected to set new lows. Have a very big key level at 131 that we almost made it to. So if Apple remains weak and stays below this zone, I'll be targeting that 131 and 130 to the downside. But if Apple can hold yesterday's lows and pre-market lows, and we have a nice 30-minute squeeze here as well. So looking to hold that 30-minute squeeze bottom, start to work our way back up to this zone, take out this trend line from the last couple of days of selling. And if we can turn this zone into support, then looking to push back to 136 and 138. Just the thesis that we have sold back And we're starting to, and if we can start to settle and push back through, where do we want to target to the upside? The daily 8 is now sitting at that 138.8. But if Apple continues to remain weak, I'm going to be targeting 131, 130, and below that, my next key zone is 128.5, 129, where the third Keltner sits to the downside. So if we do lose this 131, I'll be targeting this zone, and that'll be third Keltner, which is kind of starting to get oversold. We are still at the bottom of this 2-day squeeze. So let's see if we are going to try to reverse off of that. Breaking this trend line and trying to get back up to 136 is going to kind of give us a little more confirmation of that reversal. AMD. Yep, we still have POC up above on most things. Let's see, AMD gave out that 65.5 yesterday. I want to watch yesterday's lows. This second Keltner to the downside around 63.5. If we can hold 63.5, 64, looking to get back up to 65, 65.5, up to 66.5-ish at the top of this 2-hour squeeze, and where that daily 50 sits. But if we keep slipping, downside targets would be 62, 60, and this 58. Overall, 56 is a huge key level. It's what held us at the lows this year and what we worked back up off of to get, back up near 80 and whatnot. So let's see if we can get back to this 65 and work back off it to get to these moving averages, or if we're going to trickle down lower to 60 in that third Keltner. Amazon. Ooh, Amazon down there, 85. I'm trying to remember some of our folks in the long-term investment channel picked up some Amazon, I want to say like a month ago, around 85, and took it up near 100. Curious if you guys are interested in loading again now that we're back down near this 85. Just barely starting to slip out of this daily squeeze. It is pretty much still intact. So let's see if we can hold yesterday's lows, pre-market lows, push off of this 85, and start to get back up to where we sold off from yesterday at 88. The daily 8 sitting there as well. And then back up to the daily 21 near this 91. If we keep slipping and lose that 84.5, next big key target to the downside is that 81.3, and that's where that third Keltner sits. So, getting a little, if we give out, that's the next target, and that's also, where we're getting a little oversold and could see a reversal. But let's see if we can hold this second Keltner and start to work our way back up off of that. BA. Nice little hold of that zone on the ES. Looks like it moved about 10 points up off of that zone I just drew it on yesterday's low. Back up to this 38.43. So even as I was talking, if you are a futures trader, you could have captured about 10 points off of that zone that we drew, right back up. BA. Holding up very well compared to some of the big tech names that we just saw down near second and third Keltner to the downside, and BA holding this channel. Like we saw on the market and the number of names, we had a down day yesterday and got below Friday's levels. BA did not. It did a great job staying above Friday's levels. It does have a number of stack squeezes. So basically for today, looking for BA to stay above yesterday's lows and this 184 daily 8 MA. And if we can push off of that, looking to get back through yesterday's highs around 188 to try to get back up to the zone above at 190, 191. If we can't hold that 184, then we'll likely see BA start to cascade down to the daily 15 at 182-ish and the daily 21 at 179. Cat. Friday, Cat did a great job of holding that 228 and getting back above 230, the daily 21. Yesterday, we just came right back after that strong kind of gap up morning push. But came back and holding the daily 21, setting a higher low. So let's see if we can hold the daily 21 around this 230, 231, and try to push our way back up to 235 at the top of these squeezes, hourly squeeze. And if we can get through that 235, looking to get to yesterday's high around 237 and recent highs around 238, 240 up above at the top of this daily squeeze. But if we start to lose the 21, the daily 21, in the middle of this daily squeeze, at around 230, then you want to be targeting that 228 and 225 back to the downside. Google. Well, Google trying to hold around 88 pre-market. Let's see if we can push off of pre-market lows and this 88 level to try to get back to 89, 89 and a half, 90, and maybe even back up to 91. The bottom of this zone, we have the daily 8, which will probably be stepping down near that 91 today. If we keep slipping to the downside, my next target's 86 and 85. Have a little zone of support here. We also have our 2-day squeeze bottom there as well. GS. On GS today, looks like we're having a few prints above where we closed. Overall, let's see if we can hold yesterday's lows around that 343. And if we can hold 345, basically around where we closed. Looking to hold there and work our way back up to 350, 353 where the daily 50 sits. We do have some tight squeezes in this range. If we start to lose that 345, probably going back to retest yesterday's lows around 343. And should it give out past that, we targeting 340 and 338 where that third Keltner sits to the downside. When everyone starts screaming that we're going to sell off, but a lot of names are at or near their third Keltner to the downside, we want to be a little weary because that is an oversold indication that we could start to hold and see at least a little. I'm not saying that we're going to rally to new highs on everything. I'm just saying we are starting to see some oversold indication to where there might be a relief bounce. We've gotten below daily moving averages. We might get a bounce up to them to reject before heading lower still. So yeah, that covers GS. Let's go to Meta. Meta holding up surprisingly well, right near its POC, and near this key, 113.5, 114. So if we can continue to hold here, looking to work our way back up to some of these pre-market highs around 115. We've got the daily 50 around that 115 and a quarter, daily 21 around 116, and all of our daily moving averages sitting right above. So looking for a hold of this 113.5, 114 to push back up to these daily moving averages. If we start to lose 113 pre-market low, then we should be targeting 112.5 was recent low, and then basically 110 down to 106 at the bottom of this daily squeeze. Basically trying to hold in the middle of that daily squeeze right now. So let's see if we can hold the middle and start to work our way back up. If we start to lose it, then you overall want to try to target the bottom of that daily squeeze. But Meta's been holding up well. You know, it got beat up really hard this year and has finally fought back above some key levels. If we can continue to hold this 114, looking to get back through those daily moving averages and back to that 123. Microsoft. So Microsoft at the daily 50 around this 240. We do have the bottom of a daily squeeze. Oh, I hate when it does that. Bottom of a daily squeeze around this 236. So if Microsoft continues to look weak and takes out pre-market lows and loses 238, you want to target that 236. If we give that out, then I've got a zone at 232 and a half-ish, 230 and a half-ish as the next targets to the downside. But if we can start to hold here near this 240 and this daily 50 and the bottom of this daily squeeze, looking to get back above 240, 241, and then make the journey up to the daily 21 at about that 247. And you know, we made it up near this 266. Now we're pulling back near this 241. Want to see us start to hold, get back above it, turn it to support, and break this downtrend to start to recover. Netflix. Trying to hold near this 280. Watch that pre-market low. If we can stay above 277, 280. Looking to hold there right near this daily 50. Push back up to 290. And start that journey back to 300 where the daily 21 and the daily 8 sit. But if we start to lose 280 and pre-market lows at 277, you want to be targeting 274 where the second Keltner the downside sits. And then the third Keltner down near 260. Which I believe is still above the last earnings gap up. That 260. NVIDIA. So we're right near where the last downtrend flipped up at about this, 156 to 160. So let's see if we can stay above 160. Would be a good spot to try long back to the daily 21, which sits at 165. The daily 8 up near that 168 and a half. The daily 200 up near 173-ish. But if we start to lose that 160, we want to be targeting 155, 150, and this 147.5 where the daily 50 has now caught up to. We've done a good job staying away from that daily 50, holding the daily 21 and pushing up repeatedly. Now we're right at that daily 21, right at 160. Need to see a bounce and get back above that daily 21, or else we could vacuum from the 21 to the 50 if there's continued weakness in semiconductors and in the market. QQQ. And we're almost done. So we're trying to hold near the second Keltner. Basically want to watch yesterday's low and pre-market low, want that to be a zone of support. Start to push us back over 270, back to 272.5 and 275 to recapture yesterday's slip. And then past that up to 280. Our POC still sits up above, near that daily 21, near where we settled and pushed higher. Basically meaning that we've slipped down on lower volume. You know, we can see that we had increasing volume up to this point and to reverse, and now the volume is getting lower and lower. So, on QQQ, let's see if we can hold above pre-market lows and yesterday's lows and try to push higher. If we start to lose those and lose that 266, then we should be targeting 260 down at the bottom of this 2-day squeeze near that third Keltner to the downside. Yep, I think that covers everything there. Take a quick look at SPX. Come on, come on, come on. There we go. Yeah, we basically had some little gaps. I'm not really going to mark them. Basically going to be opening flat or down just a few bucks. So we want to watch 3,800. It's low from yesterday. We'll be opening a little lower than where we closed. Let's see if we can hold yesterday's low around 3,800, get back above this 3,815, and use that as support to push back up to the daily 50, which sits up at 3,867. That would be getting above yesterday's high and filling that little gap down from yesterday. But if we start to lose 3,800, then we want to be watching, 3,750, 3,730, which is the third Keltner to the downside, and this 2-day squeeze bottom, which fans down near 3,700. Well, let's see if we can hold at 3,800 and start to reverse back up, or if we're just going to keep slowly drifting down. It's been controlled selling. This isn't panic selling or anything crazy. It's been very controlled, where we get up near moving averages and push away from them, and get up near moving averages and push away from them. The MA clouds have been very, very helpful every day, right? But especially in this sell-off for the last week, basically every time we get up to the MA clouds, we reject, and it's another entry short. Let's see if that trend starts to shift today and MA clouds start becoming support. So SPY, I've got key levels at 380, 381.5. Need to get back above that zone, turn it into support to push it back to 386 where the daily 50 sits, 390 where the daily 8 sits, and 392 where the daily 21 sits as upside targets. But if we keep rejecting 380, 381.5, and we start to lose yesterday's lows around 378. If we start to lose 378, we want to be targeting the overnight low at 376, and then our next key level at 374. Below that, the next key level is 370, and that's the bottom of the 2-day squeeze. But keep an eye on yesterday's low and the pre-market low. If we start to lose yesterday's low, we'll go to visit that pre-market low and then try to get down to the next key levels. But if we can hold, get back over 380 and use it as support, then it's back to the daily 50 up above. Tesla. Thanks for being patient if you're still with us. Ryan that asked about Tesla. I can say it's gotten beat up. Made it down below 150 yesterday, but then had a very strong snap back above. Closed a hair below and gapping down. We want to be watching yesterday's lows. If we start to lose that, third Keltner to the downside is just a hair below at 144-ish. And we do have a, darn it, 4-hour squeeze, yeah, that we are near the bottom of. So if we can hold around this 145, 144, where the third Keltner sits, at the bottom of this 4-hour squeeze, looking for a run back up to 150. If we can get through 150 and pre-market highs and use that as support, it would also be kind of Friday's lows. Looking to push off that 150, get back to 160 where the daily 8 sits and the top of this 4-hour squeeze. But if we start to lose yesterday's lows, 144, then we want to be targeting 140, 136.65. It's my next big key level to the downside. Well, let's see if they've had enough, and 145 can push us back over 150. On to UVXY. So UVXY and VIX were very interesting yesterday. They had some hard drops for like the first half of the day and then reversed back up. Whereas the market, had only a good push up in the morning and then went down the rest of the day. So as the market was going down, UVXY was also going down. Same with VIX. We'll review that in a second. So for some more upside today and to maybe reverse this downtrend, looking for UVXY to stay below 7.4, 7.5, start making that journey back down to yesterday's lows near 7.1, and then give out and head down to 7, maybe back to 6.8 at the bottom of this daily squeeze. But if we're going to see further selling, normally, we should see UVXY try to push up over 7.5 and start this journey up to the daily 8, back up to the highs from Friday near $8. But as we saw yesterday, UVXY was going down while market was going down and basically just staying in a range. And when UVXY started to really bounce yesterday is when we really gave out. So, always worth watching just because it helps time things. When we started to see this reversal on UVXY yesterday, and it started to go back up, that's when I said, we've locked up a good amount of our puts, leave runners, because we're starting to get some signs of a big drop in the last hour of the day. So, let's see if UVXY can stay under 7.4, start to go down near yesterday's lows, giving us the green light to head up on the market. And then VIX. VIX very interesting. It was going down for like the first half of the day and then started to come back. VIX keeps pushing off the daily 21 and coming back and pushing off the daily 21 and coming back. For a very strong sell-off, we should be seeing VIX get back over 25 and head to 30. But VIX is still very much being held at bay and just chopping around this 22.5. So for a reversal and to head back up today, I want to see VIX stay below that daily 21, below 22.5, start to work its way back down below 22, 21.5, 21 at the bottom of this 4-hour squeeze. Yep. But if we're going to see further selling today, we'll likely see VIX hold above this daily 8, daily 21 at this 22.5 and start to work its way back up to 23, 23.33, where we gapped up to and have slid back. So if we're going to, let's say, reject this zone on ES and head back down to pre-market lows, then we'll likely see VIX hold this 22.5 and head back up to pre-market highs. But if we can hold here on the market and start to push back above this zone, then VIX should get back down to yesterday's lows, maybe last week's lows, maybe back to 21 at the bottom of this 4-hour squeeze. So that's it for prep today. Hopefully this was helpful for everybody. Thanks for tuning in. Definitely come join our Discord server. You can come in for free. You can test out our tech every Thursday is a free day. And keep an eye out because likely this week I'm going to be releasing our new website, slightly redesigned, and we'll be starting a end of year or a new year sale where you guys can sign up for yearly and quarterly subscriptions and save a ton of money, get a great discount. So keep an eye out for that. We'll be releasing that new website and starting that New Year's sale this week, just so folks can start to secure their subscriptions. And even though some folks did let me know that they'd rather sign up after the new year, totally fine. I'm going to let the New Year sale run until mid-January, probably cut it off after January 15th. So keep an eye out for that. Likely cover that in tomorrow or Thursday's prep. Thanks for tuning in. Good luck today, folks, and we'll see you in the room.